1. Fed deploys emergency capital market liquidity amid COVID-19 crisis. In 2020, the global outbreak of COVID-19 had a negative impact on financial markets, and stock markets fell. From early January to the end of March, the Dow Jones Industrial Average fell by nearly 28%. In order to boost the economy, Jay Powell led the Federal Reserve to rapidly lower the federal funds rate and release money to the capital market. At the same time, he significantly expanded the Federal Reserve's balance sheet, directly purchasing bonds from Wall Street financial companies on the one hand, and providing large amounts of loans to major companies on the other. If you haven't already, please subscribe to my channel. Your support motivates me to keep creating. Thanks to you, I'll keep bringing you more videos. By April, the federal funds rate fell to 0.05%. This is equivalent to the cost of obtaining funds for the rich being close to zero. In order to mitigate the impact of the COVID-19 epidemic on the financial market, Jay Powell adopted a nearly unlimited loose monetary policy. When the media commented that this loose money policy would form a huge asset bubble, Jay Powell calmly accepted the consequences of asset price inflation. He also stressed that the U.S. Congress should introduce new fiscal policies of equal force to deal with the widening gap between the rich and the poor. Obviously, as a doctor, he immediately treats the head when he finds a headache, and the foot when he finds a foot pain. This is a very narrow medical thought. He has long given up the idea of overall coordination. He believes that it is good enough not to fail in his duties during his term as the chairman of the Federal Reserve. It is undeniable that Jay Powell's policies have expanded the U.S. government debt, but the impact of the COVID-19 epidemic on the financial market has indeed been eliminated. Jay Powell's actions have won praise from both parties, including President Trump. But the financial magazine Grant's Interest Rate Observer called Powell's policies a disguised form of drug trafficking. At the same time, some people get capital, and others get happiness. But these policy measures are addictive, and may harm the economy for a considerable period of time. In addition, during the response to the epidemic, Jay Powell obtained about $454 billion in crisis funds from the Treasury's Exchange Stabilization Fund to support the Federal Reserve's $4 trillion to $5 trillion emergency loan mechanism. However, due to the large amount of funds, it was still not used up by the end of the epidemic. Jay Powell wanted to continue using it, but the U.S. Treasury felt that it had been used too much, so it asked for the remaining part back. Jay Powell did not want to return it, and in November 2020, Treasury Secretary Steve Mnuchin informed the media of the matter. As the loose monetary easing policy has achieved good results, by December 2020, the three major U.S. stock indexes not only recovered their declines, but even rose significantly, with the Nasdaq Composite Index rising 43.64% overall. 2. Fed Chair and Trump align on crypto advocacy. 2020 was the best year in history for Wall Street investment banks, but it was the worst year in history for ordinary people. Due to the sharp rise in the prices of stocks, real estate, bonds, and cryptocurrencies, Fed's Powell wins Forbes Crypto Person of the Year honors. As Jay Powell's money-releasing policy has led to a surge in the prices of many assets, the rise of cryptocurrencies has attracted the attention of a large number of young people. Trump is smart. He quickly promoted cryptocurrencies and seemed to be a loyal supporter of cryptocurrencies. But in fact, he publicly criticized cryptocurrencies in July 2019. As ordinary Americans are suffering from the Great Gatsby, style prosperity, and are gradually separating from the American elite, Trump, as president, must restore their confidence. But these are just appearances. Since the United States imposed economic sanctions on North Korea and Iran in 2016 and 2018, Banks in many countries have secretly circumvented supervision to varying degrees and provided US dollars or other financial transactions to sanctioned countries. These banks include Standard Chartered, UK, BNP Paribas, France, Türkiye Halk Bankası, AS, Deutsche Bank, AG, etc. These banks dared to risk being fined nearly $1 billion to seek billions of dollars in profits. Since Jay Powell and Trump revoked the Dodd-Frank Act, many small and medium-sized banks with less than $250 billion in assets have lost adequate supervision and quickly became potential risk banks that provide assistance and participate in money laundering. They use a hollow shell company, fabricated projects, and agency bank relationships to disguise funds from sanctioned areas as legal funds through complex layers of operations to help evade U.S. sanctions. Moreover, since the Russia-Ukraine war, Russia has also used cryptocurrencies to bypass U.S. dollar sanctions. In November 2020, China has become the world's second largest cryptocurrency holder. If the United States loses global control in the financial network of cryptocurrency, then the U.S. financial system will lose in the competition. Therefore, the U.S. government must control the global cryptocurrency trading network as soon as possible, which is a brand new financial system that is different from the digital dollar. In March 2021, Jay Powell described Bitcoin at a conference held by the Bank for International Settlements as, "It's essentially a substitute for gold rather than for the dollar." But this sentence needs to be understood separately. That is, Bitcoin can be gold, and it can also exist at the same time as the dollar. In April 2021, people were worried that his policies were about to create a housing bubble similar to the subprime mortgage bubble in 2008. Jay Powell said, "We are not seeing bad loans, unsustainable housing prices, or anything like that." Meaning, please use a data structure similar to 2008 to prove that there is a real estate bubble. Otherwise, the bubble is imaginary. In fact, history has been developing, and although some plots are similar, the data structure can never be the same, and cryptocurrencies have been added. 3. He encountered the stock speculation storm. In September 2021, the U.S. consumer price level is rising at the fastest rate since 1982, devouring the remaining wealth of ordinary people. Senator Elizabeth Warren, who is well known for supporting the Dodd-Frank Wall Street Reform and Consumer Protection Act and consumer protection, said that Jay Powell has become a dangerous person and opposed his candidacy for the next chairman of the Federal Reserve. But, contrary to expectations, in November 2021, President Biden nominated Jay Powell for re-election as chairman of the Federal Reserve. However, due to the stock speculation storm that attracted public attention, Jay Powell was opposed by many people. At that time, 2 local officials under Jay Powell secretly sought benefits for themselves through financial transactions during their administration. One of them was active in real estate-related securities investment, and the other directly purchased $18 million worth of stocks before the policy was issued. But in fact, in addition to these 2, there are also Richard Clarida, Vice Chairman of the Federal Reserve, Thomas Barkin, President of the Richmond Fed, and of course, Jay Powell, Chairman of the Federal Reserve, who sold a large number of stocks before the sharp decline of the Dow Jones Index in 2020. In order to save the situation, Jay Powell decided to resolve the turmoil through legal procedures. That is, he ordered a comprehensive review of the ethical rules regarding the financial positions and trading activities that senior Fed officials are allowed to hold. What does this mean? It is to study whether the official behavior complies with the text rules. If it does, then study how to mitigate the impact. If there is an overlap, then revise the text rules. The United States is a society that emphasizes regulations, and all behavior must comply with regulations. If the rules make people uncomfortable, then modify the rules. Subsequently, the Federal Reserve introduced new ethical and trading rules. 4. Re-elected as the chairman of the Federal Reserve, many banks collapsed. After the stock market turmoil subsided, in March 2022, the U.S. Senate voted again to approve Jerome Hayden J. Powell as the new chairman of the Federal Reserve, whose term will last until May 2026. After officially taking office, the first thing J. Powell did was to start raising interest rates to reduce inflation and reduce the purchase of quantitative easing in mortgage-backed securities, thus winning praise from public opinion. But people have forgotten one fact. Who is driving such a high inflation rate? In the 17 years from 2000 to 2017, the U.S. Consumer Price Index grew by an average of 1 to 3% per year. After Jay Powell became the chairman of the Federal Reserve in 2018, the inflation rate quickly climbed, reaching 8% in 2022 alone. From a policy perspective, he solved a financial crisis, but overall, he gave birth to another economic tumor. In March 2023, Silicon Valley Bank, with an asset size of $209 billion, officially went bankrupt. The largest bank bankruptcy since the 2008 financial crisis. The reasons for the collapse were, on the one hand, the abolition of the Dodd-Frank Act, which amplified its financial risks. And on the other hand, the interest rate hike policy of Jerome Hayden J. Powell after 2022, which caused the market value of long-term Treasury bonds to fall sharply. Within a year after his re-election, Jay Powell quickly raised the federal interest rate from near 0 to 5.5%. And Silicon Valley Bank purchased $107.3 billion in long-term Treasury bonds and $98.7 billion in mortgage-backed securities, which had to wait until the interest rate was lowered before they could be sold. As a result, they had little cash left in the bank and liquidity was exhausted. But Jerome Hayden J. Powell believes that the collapse of Silicon Valley Bank was due to its own poor risk management and the impact of customers withdrawing deposits in large numbers. Moreover, the collapse of Silicon Valley Bank is a special case and does not reflect the broader systemic risks of the banking industry. As public opinion has not dissipated, a month later, Jerome Hayden J. Powell changed his attitude. He admitted to the media that regulators failed to fully discover or resolve these loopholes in a timely manner, and emphasized the need to strengthen supervision of the banking industry to prevent similar incidents from happening in the future. But how to strengthen it and how to prevent it, the details will definitely not be very clear. In short, Silicon Valley Bank has been liquidated, and its assets have been taken over by the Federal Deposit Insurance Corporation. It is clear that when the Fed cuts interest rates, these assets will be sold at a higher market value than the current market value. What many people don't know is that the Federal Deposit Insurance Corporation took over 5 banks in 2023 alone. In the first quarter of 2024, the FDIC placed 63 U.S. banks on its list of problem banks, indicating that these banks were in poor financial condition and had a higher risk. 5. Make America Great Again. In 2024, Jay Powell said that the United States needs to maintain price stability, which is an important cornerstone of the economy. When you think you understand what he means, in fact, you may have misunderstood. Powell's price stability does not mean lowering the price of goods, but just keeping prices stable. Therefore, in 2024, Powell did not cut interest rates significantly. By the end of the year, the federal interest rate remained at around 4.5%. Perhaps a rapid rate hike or rate cut would cause many financial institutions to go bankrupt, so he became cautious and kept the rate cut at around 0.25% each time. But the signal he sent to the world was that the rate would definitely be cut, but it was not known when the rate would be cut significantly. Why is it so mysterious? Because the US government has a grand economic plan. In his speech in August 2024, he repeatedly emphasized the progress made by the Fed in achieving its dual mission, including stable prices and full employment. However, at the end of 2017, before Jay Powell became the chairman of the Federal Reserve, the U.S. annual average civilian, non-agricultural unemployment rate was 4.1%, and it is also 4.1% now. The U.S. unemployment rate is not like the 7% fluctuations in Asian countries. Therefore, Jay Powell does not need to be proud of himself. What Jay Powell is really doing is making America great again. This is the consensus of the American bureaucracy, but what exactly is becoming great? If you think it is making ordinary people who own 3% of the national wealth great, then you must have misunderstood. What exactly is becoming great? I think, in addition to the global financial control capabilities, it is the economic strength of the US government. For example, the global cryptocurrency trading system is concentrated in the United States, thereby controlling the global cryptocurrency financial system. The global core resource production companies are concentrated in the United States, thereby making the US government rich through taxation. As for Trump's tariff increase, it is to drive global manufacturers to the United States, while Jay Powell's interest rate increase, but not reduction, is to attract global dollars to the United States for investment, pushing up the value of dollar assets. As for their respective statements on media platforms, there is no need to believe them. Don't look at what they say, but look at what they do. I think that before long, the types of cryptocurrencies in the United States will increase and become one of the new global financial hegemonies. American financial institutions will also sell or exchange dollar assets to the world to help other countries repay their debts to the United States. Of course, the Federal Reserve will also cut interest rates to facilitate the export of American goods to the world. This is not a financial baptism, but to help the US government spread its dollar debt. This is Jerome Hayden, Jay Powell's Make America Great Again. As for when Jay Powell will cut interest rates, it must be when the US economic growth slows down or the unemployment rate rises sharply. In May 2025, Jerome Hayden J. Powell announced that the federal funds rate would remain unchanged between 4.25% and 4.50%. In 2026, Trump may nominate Kevin Hassett to succeed Jay Powell as the chairman of the Federal Reserve. But this does not mean that Trump does not like Jay Powell. On the contrary, Powell is still respected by Trump. It's just that Powell's political show at this stage has been completed, and the Fed needs a new person on the stage. I think Powell is still a member of the Fed Board of Governors, and he will not be forgotten by power. Thank you to all my friends for taking time out of your busy schedules to watch my video TooWord. If you enjoyed this episode, please subscribe, hit the like button, and share it with others. I truly appreciate your support. If I missed anything or you have questions, drop a comment below. I'll reply to everyone. Can't wait to see you next time.